Hi, everybody. You have made it to the last day of the Singapore FinTech Festival. I have to say, it's been an amazing time. I am actually very sad to see it end tonight, but I've really enjoyed it. I'm very optimistic about the future of financial services and innovation, and I think after prepping with this nice crowd here, I'm also optimistic about ESG and the developments in that space. So with me today, we have a really interesting panel. I'm going to let them explain a little bit more of what they do, starting with you, Ben, and then we'll kick off with questions.
Sure. Well, it's wonderful to be here. Thank you so much for having me. My name is Ben Caldecott. I direct a research centre at the University of Oxford focused on sustainable finance and investment.
And hello, everyone. I'm Jane Ho. I'm the head of stewardship for APAC for BNP Paribas Asset Management. We're a global asset manager with over 500 billion of asset under management. Thank you.
Hi, everyone. I'm Sacha Sadan. I work for the FCA, which is the Financial Conduct Authority for the UK, and I help on regulation, which is obviously very important in this subject.
My name is Zbigniew Wiliński. I represent Polish Financial Supervision Authority, and I'm director of FinTech department.
Fantastic, thank you. So we're going to get right through it. Just to remind you as well that you can ask questions. We're also going to be giving a bit 30 seconds later on for a world cloud. A question that we want you to start thinking about is, if you had a wish list of where public and private sector would work on this topic, what would that be? You'll have the opportunity to complete that. Okay, so Jane, starting with you. So the question of the topic for today is, are financial institutions ready for ESG regulation? Obviously, banks play a critical role. We cannot expect, loan books, all of a sudden to turn green. So how are you doing? How are you going about it?
Thanks, Pauline. And thank you to the MAS for inviting me to speak today. I'm a representative of BNP Paribas Asset Management, so I'll be speaking from the asset manager's perspective. Obviously, regulations and regulatory landscape have been very fast-moving, just as the ESG industry has been evolving very quickly. And across different jurisdictions. So that's why a lot of the work that we'll hear later on about ISSB and will be very important as well for investors. And also not only on climate, but also on social issues. For example, I know that the EU now is looking at supply chain, due diligence and reporting as well. So definitely it's quite a challenging landscape and fast moving. But as a leading global sustainable investor, at BNP Paribas Asset Management, we take a very proactive approach. So what I mean by that, for example, is a few years ago, actually in 2019, we brought in an ESG proprietary rating system across all our funds. So funds were evaluated on ESG score. They had to beat the bench on this proprietary ESG score, as well as on carbon. And what this means is that when the EU brought in the SFDR, so this Sustainable Finance Disclosure Regulation, asking asset managers to define what sustainable investing is, we already had this framework in place that we could reference. And we were able to actually classify 85% plus of our funds as being sustainable related. And that's us being conservative, of course, in the current environment. Another thing that I wanted to mention as well is engagement with our stakeholders. As head of stewardship, this is something that's very close to my heart. Engaging with all of our stakeholders, including companies. So as an asset manager, in order to set our own net zero roadmap, which, by the way, is coming out next week, if anyone is interested, please take a look. It's a very in-depth and detailed document. We need our companies to disclose ESG or ESG data. And we're not waiting for the regulations to come into play. We've been engaging for many years with our portfolio companies on disclosures, not only on climate. On the climate side, we're very active and lead on 10 engagements. On Climate Action 100+, which you might have heard of, is one of the largest collaborative engagement programs where investors get together to have these long-term dialogue with companies. And here we're asking for climate disclosure, but we've also participated in CDP non-disclosure campaign, where we're asking companies to disclose also on deforestation and water security. So again, not waiting for the TNFD to come into play. And also, maybe I should say most importantly, we're very active on policy advocacy, so supporting regulators in their work to set the framework that our companies and ourselves will be operating in. We're not waiting for the regulations to come into play. In Asia, we're active in over 10 working groups on policy advocacy and on policy framework setting, sorry. And we have, for example, we're active in MAS's Green Finance Industry Task Force Working Group. We're very active in Hong Kong with the SFC Technical Expert Group on climate-related risk. So I can't speak for all financial institutions, but at BNP Paribas Asset Management, we've taken this very proactive approach and working with all the stakeholders in the ecosystem, and we've found that this has served us quite well today.
Fantastic. So actually, you've mentioned a lot, not waiting for the regulation, but working with the regulator. There's a lot of actually work that the regulators have done, and I think it would be actually a good time right now to perhaps share with the groups, especially thinking about, I mentioned to the panel as well, we've had a lot of discussions with entrepreneurs that find it incredibly difficult when standards change and they're very different. So for them to be able to provide tools through technology, things like taxonomy is very important. Perhaps you can give us an overview, Zbigniew, on what's happening in Europe, what type of regulations, and what the strategy is.
Okay, thank you. Activity is also really important, but regulation are the most important, I think. And on the European level, we already promoting activities connected with ESG from 2018, when we starting and we published the action plan on financial growth. And this plan has three objectives. The first one is the reorienting capital flows towards sustainable investment and degradation and social issue, managing financial risk arising from climate change, environmental degradation, and social issues. And also third, promoting transparency and sustainability in financial and economic activities. And now we issued on the European level three really important key regulation, and I mean the Sustainable Financial Disclosure Regulation, second, Non-Financial Reporting Directive, and new Corporate Sustainable Development Reporting Directive. And these are three the most important components of sustainability and disclosure regime.
Fantastic, great. And the impact that these regulations have, is it more like a carrot or a stick? Is it providing guidance, or will there be penalties?
No, I don't think, we don't think always with regulation and a penalty. We should thinking about this, which way we should go, and it is really important to think in regulation. I don't think about penalty.
Okay, Sacha.
Direction.
Thank you. Sacha, so you've been working on, as well, very heavily on creating standards and bringing all of the different standards together and looking as well at taxonomy. Can you give us a bit of an update as well, because it's very relevant for those who are looking to build on top of that?
Hi, everyone. I think we need to start with the audience. FinTech, we need you. Data is crying out for your help. And the regulator needs to help you get that data and to get it in consistent standards. So one of the things that I'm doing, and I've been an investor and an asset owner for over 20 years, so I've come to regulation hopefully from a base of understanding some of this stuff, is that we need international coordination. So I'm going to use one acronym, ISSB, the International Sustainability Standards Board. And the objective of this, and it is coming very soon, is to have one metric on each of the sustainability or the non-financial. But just because it's non-financial doesn't mean it's not very important for consumers and end users of products. So that's coming very soon, and that hopefully will give you some data points that you can use. Secondly, we're trying to regulate things like ESG ratings with transparency, methodology, and conflicts of interest, and do that internationally so that you can use that and we can use that and feel confident on the stuff that we're doing. But it is difficult because everyone wants to do this at different pace. But consumers are crying out from all of our surveys, and we are a consumer regulator, but globally, they don't believe the products. They don't even believe the companies a lot of the time. And they don't believe the politicians a lot of the time. So we have to get credibility. And that phrase, greenwashing, you all know about. So we've been working with a lot of tech entrepreneurs on innovative tech sprints where we let people into our organization and try and think about how we can spot greenwashing early. There are ways of doing this, and you've got machine learning, all these NLP, I can't even spell that. It's all of this stuff that's out there, but it really is important that we use this sort of stuff. But the first principle that we've got to remember is that we've got to get trust back, because this is really important, sustainability. And if we get that back, then the end consumers, the people who are buying their pensions, their savings, their investment products, will want more of this. But at the moment, we know that there is definitely a lot of talk and not enough walk.
Fantastic, great. Thanks for that update. And I think my iPad has gone rogue because I didn't touch anything and questions have started to appear. So I think we asked the question, you know, are financial services ready? And I think this is an interesting question too. Is ESG regulation ready?
Well, I think the word ESG can be used by so many things in so many different ways. And ESG for a bank is very different from a media company. But they're very important. And consumers who we talk to, some of them care about inequality. Yeah. They care about diversity. They obviously care, most of them, about climate change. So it's got to be relevant for the people you use. And so saying, is there one thing? No. But what we're trying to do is have one kind of standard. And there's stuff on transition plans, which Ben will talk about, which is trying to say, you can't just use the word net zero. Everyone can say the word net zero. What does it mean? How are you going to get there? Who's paid for it? And what kind of things are you doing? Because at the moment, it's easy to say, I've signed up for 2050. But that's 6 CEOs away, so that doesn't really mean much. So I think it's important. Yes, we have got regulation. It is coming. But the industry has to self-police and get on with this as well, including the financial institutions. Yeah.
So that's a good segue to you, Ben.
Sure, yeah. So I'm the academic on the panel, and therefore I'm allowed to kind of zoom out a tiny bit. And I would just say, you know, financial regulation of sustainable finance, sustainable investing, ESG, is a relatively new thing, right? There wasn't a single person working full-time in a central bank or financial supervisor on these issues until about 8 years ago. And in that time, there are now hundreds of people working on this, and central banks and supervisory authorities around the world, covering off many of the issues that Sacha mentioned on conduct and greenwashing, but also on other things. So, very important driver of this whole area. But are financial institutions ready for ESG regulation? I don't think so. I also don't think that regulators are necessarily ready for ESG regulation either. And you might say that's a bit of a problem. I think it's actually reflective of a nice partnership that currently exists. You know, the financial institutions, the regulators, are essentially trying to build an aircraft on the runway whilst it's trying to take off. They're co-creating something and learning from each other. And that process is going to be really important. And one of the things I've been working a lot on, and Sacha alluded to it, is working on transition plans. So you heard ISSB, International Sustainability Standards Board. Also remember transition plans. You'll hear much more about transition plans. And this is about turning these commitments that companies and financial institutions have made to tackle climate change, to contribute to tackling climate change, to set out how they're actually going to do that in a way that is accountable and transparent and measurable. And we've been running in the UK a transition plan task force that closely involves the regulators, the FCA, for example, but also companies and financial institutions, data providers, to kind of co-create what that should look like in an ambitious, rigorous way. And next week, we'll be publishing our disclosure framework, our draft disclosure framework, which will be open for consultation, some implementation guidance that will also be open for consultation, and something for you to get involved with, I hope, is a sandboxing phase, where we'll be working with users, preparers, data providers, other service providers to see how we can make this work. And I think the FinTech community has potentially a huge amount to offer in terms of enabling comparability and also creating products and services on the back of these transition plans that are increasingly emerging.
Fantastic, thanks. And actually, I'll encourage you, if you haven't already, there's the ESG FinTech ecosystem space here as well, that you'll have quite a number of FinTechs focusing on ESG. And I think you'll have some interesting discussions there. There's one particular there that is called ESG Tech, that's focusing on disclosures. But what they've done is that they've decoupled standards and indicators, because this is back to the discussions that we were having. You can have different standards, and when you're building a benchmark, if you don't have the same indicators, then you're not comparing apples for apples, right? So, so really important on the data piece. I'm not sure if some of you had attended one of the sessions yesterday called A Hard Look at ESG Finance, which took a bit of a contrarian view. You had Stuart Kirk, ex-HSBC, and Tarek Fancy as well there, who was a CIO at BlackRock. And the view that they really took there was that the FIs, they want to drive sustainability, but there's a misalignment due to, focus on profitability. So the whole topic around greenwashing came in, and they put a few call to actions, like, for example, policing, consumers policing themselves as well, but also having a fiduciary responsibility to also vote as shareholders. I'd love to hear your thoughts on this. Obviously, very end of the other spectrum.
Maybe I can respond to that.
Yeah, go for it.
So I think greenwashing, that's very top of mind right now. It's been mentioned as a word in every single ESG panel or every conversation I've had with anyone this week. But I think maybe slightly controversial. I think it's a good thing. It's a very fast developing industry, as Ben has also alluded to just now. And it's not very surprising that there's misinformation or mis-selling. That's for an industry that's evolved at this speed. Right now, it's actually drawn a lot of attention, regulators' attention, as well as industry players' attention. So we're very careful and self-policing as well. Not only the consumers, we shouldn't place a burden just on the consumers and our clients, but as a leading sustainable investor and provider of solutions, we need to make sure that we're doing what we say we're doing. So I think it's a relatively positive thing. But I think from my perspective, the most important thing is that I don't think ESG investing is going away.
Yeah.
I think there's a real demand for it. We see that from our clients. We see that from consumers. So I think that's one of the most important things. And just one last point on voting. That's three pillars of stewardship for us is engagement, and that's with companies, engagement with policymakers, but also voting. So we think that this is very important and leads to real-world impact. And at BNP Paribas Asset Management, we vote and make our own decision on every single vote. So while we use service providers, of course, given the large scale of the business, we do make the final decision on every vote. And that really complements the engagement work that we do with companies. We engage with companies ahead of voting season on our voting policy, but we also back up our engagement with voting.
Okay. Sacha,
Yeah, if you're being nice, you'd say this industry's grown up very quickly, and it's a bit like a teenager. It's probably overpromised a bit too much, and therefore it needs now to start growing up a bit, and it's going to get grown up with regulators and others involved, which is exactly what it needs to do. But there has been, and quite rightly, there has been a lack of trust. So I'll go back to that. The end person who buys these products doesn't, a lot of the time, believe some of the claims that are being made, and that's a real shame. So therefore, we all have to do something. The asset owners do. We've just come out with our labelling rules, where we're trying to make sure that if you want to use the word sustainable or green, you have to back it up with some metrics, and that's why we want data from people like you to say, what do you mean by the fact that this product is green? And if it does own fossil fuel companies in a green product, that might be okay, but why is it okay? And show what you mean by that. And that might be, and again, the language that consumers like, they like the word improve. They don't know what transition means, or they're not understanding these things. We should, but they don't. And so we have to speak their language. And I think we need metrics. How many cars has that taken off the road? What does it actually mean to an end consumer? And I don't think we've done a good enough job on that. There's too many products out there. There's lots of them, and they're all saying different definitions of green. And I think we've got to start getting away from that and starting standardizing it, which, with the EU, SFDR, and our labeling regime, is trying very hard to do that.
Ben?
Well, I mean, engaging consumers, retail investors is a really important area, and I think this is again where some research can actually generate some useful insights into what is the right kind of information that can support people make better decisions, and we need to empirically assess that. And so I've got colleagues, not just at Oxford, but at other institutions around the world working on these questions, and then that can feed back into better products and services.
Great. So I think as well the other challenge, and I know Sacha, you're very passionate about this too, is so yesterday we had Sonam Wangchuk, who's founder of Himalayan Institute of Alternatives. And yesterday he spoke about the need to consider all when thinking about transition, especially for poor countries, right, that need resources. So how are we considering the S when not all is equal?
Well, let's just start with the beginning. It is called E, S, and G, and therefore, how can you miss the S? So it's pretty obvious in my view. Secondly, you can't do E without thinking of S, because a lot of it is linked. If you're going to change a community and reduce what they're doing, then you have to think about that. So one of the areas in the UK, we're talking about things like green mortgages. That's a great thing. Sounds a really good idea. Green mortgage, who would argue with that? But what if it's only available for people who've got the money to be able to put insulation or solar panels on, and people with money then get an even cheaper interest rate? What about everyone else? Is there not products that could fit the gap? So we've got to think about that. And inequality is one of the areas that consumers around the world care passionately. That's why you do what you do on your voting on pay some of the time, because your clients want alignment. And therefore, I think it is very important that the S is there. And then the last part on S, which I find from all of the studies globally, people care about diversity. They care about that. And when they mean diversity, of course they mean gender, but they also mean diversity of thought. And there's enough academic studies that have shown that challenge at the top, or thinking of new ideas, inviting FinTech people into the room at the highest levels and challenging existing board members is a bloody good thing to do. And therefore, we need more diversity. And I think that is something that is starting to happen, but the S needs to happen much more. And companies need to explain what they're doing on that, which they are starting to do, and mainly because their employees are demanding this. Let's not forget, employees of the biggest companies around the world are saying, what are you doing in my firm? Why would I want to work for you? And so they're having to justify it, not just to their products, but to their own investors and their employees.
Yeah, no.
Pauline, maybe I'll elaborate with a topic that might be of interest to this audience as well, is that BNP Paribas Asset Management had a partner with a Danish FinTech called Matter, who I know is here this week as well, but I haven't been able to connect with them yet. But we built together a data set that we call SDG Fundamentals, which is actually covering 50,000 issuers, looking at their revenue stream. So it's a bottom-up revenue-based model evaluating their products and services along the UN 17 Sustainable Development Goals, and in fact, the 160 plus, I think, sub-indicators as well, classifying these products and services as either aligned or misaligned. So this really does take the kind of whole ESG and sustainable growth all into account. Another point I wanted to make on data as well is that I think partnership is really important, such as the one that we have with Matter, because when we were building this database together, there was a lot of interactions between our team and the Matter team in terms of what are the thresholds, how do we classify these products and services, and these 160 sub-indicators of the SDGs, how do we map them to separate products and services? And then now, finally, now that we have the data set, how are we going to use this data set with respect to, it's just been launched recently. So how do we apply this across our funds? Again, it's a kind of proactive approach to when we get further down into ESG, it's not just about, the SFTR, what's the next step going to be? So definitely look forward to, further partnership with the FinTech community. I think we're just at the kind of 1.0 of ESG FinTech data. I'm sure there'll be much more that can make us much more efficient and better decision makers ultimately.
Yeah, and just on that, because Deborah, for example, who runs the RegTech Association, it's sometimes very daunting for startups to actually reach out to financial, to banks, big banks especially. Could you give us a 1 minute on how you met them? How did it happen?
I'm looking after Stewardship. We have a team of 30 in the Sustainability Center, but we're very open to partnership. Ben mentioned research as well. We sponsor a grants fee, which is Ben is a founder of. So I think you're better subject matter expert on that. So we partner with academics on research, and we also look to partner with different FinTech company. We also partner with Iceberg on biodiversity data, for example, and created a matrix together with them. So I think we're very open to partnerships, and that's part of the learning curve for us. I think we're all somewhere along this learning curve. So looking forward to that.
Fantastic. So I'm going to start putting the questions because I'm mindful of time, and since I have UK and Europe here, there's a question here. FCA has released the fund labels, and it is different from EU's fund labeling. For a financial institution who has funds in both UK and EU, how do you navigate?
Easy. The SFDR went first.
Love it.
SFDR went first. It's fantastic. It was great they went first. They went early. But it was meant to be a disclosure regime and ended up becoming a bit of a labeling regime with Article 689. So we had to look at that, and we talked to our colleagues. I was in Brussels last week. But we think that the labeling needed to go further, and it needed to have metrics. It became a bit of an exclusionary approach. And of course, we need improve. We need things that are better. So we've mapped it. But if you are going to be selling products and you are charging quite a lot of money for these products, and hopefully for very good products, then I think you'll find it very easy to map the fact that you need to do certain things. One of them, show me what you're doing apart from hitting a financial metric. If it's a sustainable fund, what sustainability target? If you can't measure it, then why are you calling it sustainable? You should be able to do that in 2022, let alone in 2024, whatever, because the metrics are coming, the data's coming. And secondly, explain it. That's the other thing that we're trying to do. We learned from the consumers. They want a 2-page document of explaining why you own things that might be a bit of a surprise to them, including why would a green fund own fossil fuels? Because that's the question we get asked all the time. It doesn't mean it's bad, but why you own it. Maybe it's you own the best oil and gas company that is transitioning to a net zero better than anyone else. Excellent, but explain that in the language that a consumer can understand quickly. But it does map quite well to SFDR, but we should take it to the next level. And I'm looking forward to when version 2.0 of SFDR comes, and hopefully they'll be listening to what we've done as well.
Okay.
And we are still living in one Europe, yes.
Absolutely,
but,
absolutely.
We have different regulation, but it's worth to mention about the last regulation from EBA. It was last year, and the European Banking Authority published a document titled Report on Management and Supervision of ESG Risk for Credits, Institutions and Investment Firms. And this is a very important document for companies, because their recommendation to institution 3 pillars. First one, business strategy, risk management, and governance. And this is really important when we create a new solution, new products. We have to look for these 3 pillars and act exactly due to this regulation.
Great, thank you. World Cloud, please. I think we are running out of time. We'd like to see what that gives us. That was the cue. Not? Yes? Okay, so I'll go for the next question in case I'm not sure they've... World Cloud? Yeah, okay. All right, so I don't have my glasses, but... Whoa, that's a very long word. Fantastic. Okay, so type of projects that that private and public sector could work in. I'm gonna steal that very long one. Interesting. Thank you very much. So we've got time for a few more questions before we need to close. And I think this is a really interesting one around governance. Would an independent ESG organization within the larger organization help keep a check on its ESG agenda, measure independently audit reports, and without bias? Have you seen this taking place, or?
Very brief answer. I don't think anyone should, I mean, independence is nice and assurance, and there's work going on assurance from audits and stuff like that. But ESG should be totally embedded in the organization. You shouldn't add diversity to the side or add inequality or health and safety. It's got to be driven by the firms or the product that you do, not put it in the side and make it a nice independent thing. Obviously, you want some verification, but that might be FinTech, it might be other things. Yeah. But no, I think ESG's got to be embedded.
Yeah, no, I agree. I mean, I think we saw that with innovation as well. You had the innovation labs, and then that was completely separate from other areas. Anything from your side?
Yeah, I mean, just completely agree. Not too much to add. I mean, we have a sustainability center of 30 people at BNP Paribas Asset Management, but we work very, very closely with our portfolio managers and investment teams. And in fact, in every single team at BNP Paribas Asset Management, we have ESG champions. So these are members of the investment teams, of the different teams, who are actually our very close contact. And that's one of the mechanisms that we have to make sure that we're fully integrated. And ultimately, if we want what we do in terms of how we invest for our clients to be fully integrated with ESG, that's what needs to happen.
Mm-hmm. Okay, interesting. So one very quick one. Are there any regulations about green blockchain? Yes, no, and if yes, a quick hint of anything that you're working on.
But there's lots of things going on, not just with us. We've seen it in the SEC. We've seen lots of people talking about that. But I think what's happening now is we're starting to see owners of businesses starting to think how they do it. And as Ben's mentioned before, we're trying to give them the data so that people can make the difference between a good plan and a plan that hasn't really been thought out, but they wanted to sign up to something nice because everyone else was doing.
Great, thank you. So I didn't prep you for this, and we have 1 minute. Ben, I'll start with you. In a year's time, if we're sitting here, what would be the title of the panel?
I don't know. Maybe our financial institutions slightly more ready for ESG integration. I mean, it's a never-ending process, and a lot can be achieved in 1 year. What I hope happens next year is that we're talking much more about this transition plan work that I mentioned before.
Thank you, Jane.
Maybe for me, it will be similar to Ben and moving on as well from planning to actually execution. So rather than focusing, I mean, the focus right now is there's a lot of geopolitical and debate on greenwashing. I'd like that focus to move on to real world and companies transition. In my work, I engage a lot with companies, and I just really hope that we can move on to what is being done and what is the short-term plan. I mean, just not only for us as asset managers ourselves, but also the companies that we invest in, what they're doing in the short and the medium term.
Great. Sacha?
What do we do with not credible net zero transition plans? And what's the FinTech industry going to do about companies that don't have a credible plan?
So it's on us, FinTechs, like it. And
we should know that in EU and probably in other jurisdictions, it will be really important implement appropriate risk management rules, especially in ESG risk. And we should know that ESG risk is long term. and probably in 10 years we will know what will be happen and what was important or what not.
Yeah, great. Well, with that, thank you very much. Thank you for coming to Singapore and to the Singapore FinTech Festival. Safe travels to you, and have a fantastic end of the festival.